Good morning, traders. Today is the 3rd of February. My name is Neville Hornsey, market and shoe trading. And today, we're taking a look at the euro versus the pound. Starting off with the YouTrading.com Forex heat map, we can see that the US dollar is gaining strength today. The strongest currency is the New Zealand dollar. The weakest is currently the Swiss franc, and the euro and the pound are mixed across the board, and they're basically doing as good as each other across different assets. If we go to the active trader platform, this is the weekly chart of the euro versus the pound. You can see that the stochastic is in the oversold level, but that can lead to a greater or longer decline. We are in a bear market. We've got lower lows, lower highs in terms of the swings on this weekly chart. And up here, this is about the Bank of England. I put after opting to lift the bank rate by 15 basis points to 0.25% in December. The Bank of England's Monetary Policy Committee, the MPC, is set to follow suit with a further 25 basis point hike today, taking the bank rate up to 0.5%. And the markets are expecting the bank rate cycle to reach 1.25% by the year end. So by 2022, we should be up to 1.25%. That would be extremely bullish for the pound. Right, December meeting for the ECB, they announced the end of PEP, which should conclude by the end of March. And they're going to be moving some of those purchases into the APP, the normal asset purchase program. And the market's pricing in a 10 basis point hike to the deposit rates by the end of October. This week, we had higher inflation come in. So they're expecting the ECB to address the higher inflation. You know, just like the Fed had to ditch the transitory inflation short term, the market will be looking for that to happen in the ECB meeting today. ECB officials have stated that a hike is unlikely to take place until 2023. So if the market does not get a hawkish stance and a 10 basis point hike by October, and the ECB sort of stand still on the rate hike cycle, then the euro should drop, as the Bank of England have basically started their rate hike cycle already. Currently, we have to wait and actually see what the Bank of England say. There's a lot of talk about bank rates, but we have to wait until they actually do it. If we get it, then the pound goes higher, the euro goes lower. If we get a disappointment from the Bank of England, the pound goes lower, the euro goes higher, until about an hour and a half later, when the market looks to see what the ECB are going to do. If we get what the market expects, then I'm sort of assuming that we come down, sweep the double bottom here from December 2019, February 2020. Like I said, this is a weekly chart. So if we get a week close below that, that then offers up a big move down to the 0.8 level. If you come back to here, around June 2016 is when Brexit happened. The euro versus the pound obviously appreciated, got firmly above the 200 period moving average on this weekly chart, but it did leave this sort of volume void here. So if we get close below this support level, then there's not a lot stopping us coming down to sort of test this swing high here from April 2016, but more importantly, where this breakout happened in June. So 0.8 would be the target to the downside if the market gets what they're expecting. If we get a disappointment from the Bank of England and a reversal in attitude from the Euro ECB, then we should maybe see like a big test up towards the 0.845 level. Just I don't think we're going to get back up to the weekly 200. This at some point the Bank of England is going to raise rates again. So yeah, we might get like a little bear market rally. That's what I'd be looking for if we get disappointed by the Bank of England today. Okay, I hope you make some money. Try and wait until after all of the news is sort of out, then wait for a good technical level. And I'll speak to you again tomorrow.